Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to be talking about how a technical trader might construct an entire trading system around just a single chart indicator. We're talking about the TTM Squeeze and how some traders use that to generate entry signals, as well as calculate targets and stop placement. A lot to cover. I think it's going to be an interesting discussion. We're going to be placing a trade before we're done with everything, so really looking forward to this. But before we get to that, let me first of all say hello to everybody who's chatting in. Always great to see the Friday crew. Hello there, Truth Over Lies, Sharon, Scott, Jim, Ricebird, Michael, Jay Frost, Life in the Fast Lane. Who else is here? Jay Richardson. Everybody else, thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. It's a great way to watch these webcasts, but you're certainly invited to join us in the Friday audience if you'd like to be here. Things kick off promptly at 1 Eastern time. Now, I also want to let my live audience members know that my very good friend Kevin Horner is going to be hanging out in the chats. Kevin and I have been working together for years now. Kevin's a fantastic presenter, brings a ton of knowledge to this discussion of charting. So what Kevin's going to do is keep an eye on the chats, and any questions that come in that I can't get to, Kevin's there to pick up my slack as long as they're not too far off topic. So thanks for having my back there, Kevin. Kevin and I would also like to issue an invitation to everybody listening to follow us on social media. You should be following your favorite Schwab presenters on social media. It is the way to connect with us in between the live streams. So you can find Kevin and me on X. You can find Kevin there at Kevin Horner CS. You can find and follow me on X at Cameron May CS. And as of a few months ago, you can also follow me on LinkedIn. Just go to linkedin.com/in/Cameron May CS. All right, but let's get into this discussion of using the TTM Squeeze to construct a complete trading system. But as we do, of course, it's not a perfect approach. Nothing is. So bear this important information in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research. And investing involves risks, including the loss of principal. All right, so let's lay out an agenda for today's discussion. As we always do, we're going to take a look at our current example positions in our paper money portfolio. There's really only one. There's one current one. There's one that wrapped up since we last met. So we'll take a look at both of those. Then we're going to look at the markets through that trend value momentum strategy set that we typically use. And then we're going to get into our discussion of using the TTM Squeeze to create a trading system. So in that discussion of the TTM Squeeze, we'll talk about how the indicator is built. Then we'll talk about how to recognize entry and exit signals from the indicator. And we'll use that to plan and place an example trade. So let's get right into this. Let's go right to the thinkorswim desktop. Here's our current position. APH, we have 65 shares. Those shares were purchased at 134 bucks. They're right now at 133 and a half. So pretty much a break-even trade. This is just from last week. So here was last week's discussion. We were talking about using the average directional index, known by its name ADX, to identify ranging stocks. That means channeling or stocks that are going sideways, and then looking to trade within that range, buying at lows, selling at highs. To supplement that effort, we're using the MACD oscillator. Now, last time we convened, we talked exactly how the ADX is built. We talked about the potential implications of using that in combination with the MACD. If you weren't here to see that discussion, do yourself a favor right now. Pop down below the video, click on the subscribe button if you haven't done that previously. But that subscribes you to our Trader Talks channel on YouTube. The full channel name is Trader Talks Schwab Coaching Webcasts. And you can find previous webcasts. Of course, you can join the live streams right here, but you can also find previous webcasts, or previous, we might call them episodes, by clicking on playlists. And then for my webcast series, it's about halfway down. So if we scroll on down about to the halfway point, there's the advanced charting techniques. We can see the view full playlist link right there. And here we can see swing trading with ADX, the quest for sideways stocks. That was the name of the video that you'll be looking for. But let's get back to this trade. So our entry was taken just as the ADX was below 125, indicating a sideways trend. And we look for the MACD to be low and starting to rise. We got that. That might indicate that price has come down toward the low end of our trading range and is also starting to rise. And we would just hope that that would continue. So we have a plan to exit if we can get price back up to 155. That plan may not work. So we also have a plan to exit if we slip back down below channel lows. So with a stop just down here below that 127 support. Neither of those have been accomplished yet, so we're going to let that continue to work. So that's the first trade. The other trade I need to talk about is what happened with our GD position. Let me look at my trade history here in the account. We bought GD for 348.75 and just recently sold it for 352.86. Very small profit, just a shade over 1%. What happened with that thing? So let's bring up GD. Let's load up the study set for GD. And for this one, we used the TVM, or the Trend Value Momentum study set. And of course, you can go to the video archives and look for Trend Value Momentum, and you'll see that discussion as well. But in any case, with this, we were looking for, first of all, a trend confirmation. We needed to see the 50-period triangular moving average to be rising above the 100 as a trend confirmation. We had that back at the time of entry, back here, second week of February. Another thing we were looking for was for our RSI to indicate potential short-term price value dipping below 40, and we actually got just there. And finally, again, using the MACD oscillator for momentum, so Trend Value Momentum, TVM, we were looking for our momentum oscillator to be shifting from bright red to dark red, a bit of what we call a red shift. Might indicate that bulls are starting to seize the momentum from the bears. And we had that. So the objective here was, as we were getting that set of signals, we're trying to get up to previous highs right up here at 370. You'll notice price did subsequently get up to, how high did we get? 366.75. So we got within about $3 of our target, got awfully close, but then started peeling back. Now, what we decided to do last week, and I think that this is an important lesson, I think it's a healthy habit to go back and look at decisions that we made in the management of positions. Let me zoom in on this. I want to get a closer look at this because, so last time we snugged our stop up to just below this broken resistance from right here. We moved that stop up to 354.02. It was previously down here at 337. That was the original stop. As we broke up, came close to our target, we moved the stop up, and then price came down. And right here, right near open, we were stopped out of that trade for $352.86. So that was that small profit going from here to here. Now look what price is doing since then. We're still hanging in there above the 100 triangular moving average, getting a little bit of a bounce. Was it the right decision to tighten that stop? I think at the time it might feel good to be managing profits instead of losses, but also it introduces risk of it introduces more risk of what we'd call a whipsaw event, just getting tripped out. Now, obviously, I don't know whether that's going to turn out to be the right decision or not, but it is something that the trader might revisit from time to time if this is their habit, if we're constantly moving stops up. Revisiting to see where we're placing those stop levels may help, because if we're getting constantly whipsawed out, maybe we're misinterpreting market conditions at the time. Maybe we need to give the stocks more time to work. But for right now, the price is actually right back very close to where we were stopped out. So we'll see. If it goes on down to 337, we're going to be feeling pretty good about managing in the way that we did. If it rallies on up to 370, maybe the trader's not feeling so well. Chris B says, in hindsight, the moving average might have been a better stop. That's another thing, right, Chris? Instead of going for the broken resistance, maybe our trader might have been looking at this 100-period triangular moving average and putting their stop down below that. So that might have been, at that time, that would have been down here around 343. Maybe we were only moving it up a few bucks. But of course, we'd also be exposing ourselves to a larger loss on the way down. Time will tell. Yep. John says sometimes short-term trading is difficult. John, I would say maybe it's more than sometimes. Yeah, but we can always learn from the past and see if that leads to refinements in an approach. But for right now, I think we'll just say, well done. So that brings us up to speed with our current positions. Let's go look at what's going on with the markets. And for the markets, each week we look at the same set of technical indicators, the trend, value, momentum set. And it's not to say that's the only way it should be done, but let's look to see what's going on as the markets have been selling and selling and selling. It doesn't look great. We got a candle with a, it's a red candle, looks like an inverted hammer. Interestingly, that's traditionally seen as a bullish indicator if it's happening at the bottom of a downward move, which is what it is right now. We'll see if that pans out. Typically, a trader would be looking for a confirmation for price to move above the body of today's candle for an inverted hammer. But what about trend? Has the trend changed yet? Oh, King Louis says, you just joined. What's a triangular moving average? Never heard of it. King Louis, great question. We've actually discussed this in good detail in previous webcasts. Very briefly, a triangular moving average is basically we take a simple moving average, and then we take all the values, the closing day values for that simple moving average, and we take a moving average of that. It's known as a double smooth moving average. But if you want to see that in better detail, make sure that you do go back to the channel. So Trader Talk Schwab Coaching Webcasts. You can actually just do a search right here, triangular. Boom. There we go. And you'll see previous discussions. I think I used it in the thumbnail rather than the title. And unfortunately, the thumbnails are not searchable. So you might have to look for moving averages right here, or you can just go down through the archives for this webcast series and you'll see a discussion of different moving averages. Yeah, I think my thumbnail was something like simple, exponential, and triangular. Okay. Or I also discussed it in detail in the one called the TVM. That's it. That's it. So I have to remind myself sometimes. There we go. That one will show you. TVM, swing trading, the trend value momentum stock chart system. Anyway, so according to this sort of a technical approach, this trend would still be considered to be intact with the 50 still above the 100. There's a narrowing there. So I wouldn't say that it's strengthening, but still we might put a check for the bulls despite price having fallen below both of those moving averages. And that's going to make some traders uncomfortable, but that's a traditional interpretation of what we're seeing with this combination of moving averages. So I'm going to say trend, check. What about value? Well, our RSI, I think this is the lowest value it's had. It's at 34 right now. Did it get down to 34 back here? It got to 34.88, and right now we're at 34.32. This is the lowest RSI we've seen since back here. And you can see this is why for some technicians, when the RSI reaches these extreme lows, they may actually see that as a bullish sign when otherwise candles, trend, everything else might look bearish. So this to me would actually be a check for the bulls again. That's interesting. So trend, we have a candlestick that's actually technically bearish despite its kind of nasty red color. Finally, what's our momentum oscillator doing? Trend, bullish. Value, bullish. Momentum, looks like it's still bearish. It's still getting brighter red down here in the histogram bars. What we'd like to see there is to transition back up to a dark red. So there we go. So kind of two votes for the bulls, 1 vote for the bears. Today we're going to be placing another bullish stock position, and we're going to be doing that using the TTM strategy set. Pardon me, don't call it a strategy set because it's just an indicator. But I am going to pull up a stock here and introduce how this indicator is built. So let's clean off our studies. Let's remove all studies here. Start with a nice clean chart. And with 180 people watching I would suspect they're going to be a good number. I know my audience fairly well, at least the regulars. How many of you are familiar with the TTM Squeeze indicator? I think I'm going to see a lot of yeses, but I also suspect I'm going to see plenty of people saying no. So I want to talk about how the indicator is built. What's the big issue that it's attempting to address that's not addressed by other indicators? And then how might we use it to identify entry signals and use it to plan targets and stops? Hey, Chris, I figured. There's a yes. Wiley says yes. A lot of yeps. And there's Bessie saying, not me. Alex says, nope, not everybody knows every single indicator. There are hundreds of them. So let's acquaint ourselves with this. Well, the TTM squeeze, the word squeeze might remind you of a different indicator. It actually is an attempted, I don't know if we call it an improvement, it's a variation on what's known as a Bollinger Band. Yeah, Bollinger Band traders look for something called squeezes. So let's add our Bollinger Band to our chart. So a Bollinger Band basically looks at over a 20-day period. That's what this 20 means. It tries to capture price activity in what's called an envelope. So if I click apply here, what we're going to see are three lines. So we have one line that's a 20-period simple moving average. There's a line drawn above it and a line drawn below it, which is an effort to capture 95% of trading activity over the course of a year. So that 95% happens to coincide with two standard deviations. So it's a two standard deviation line above a 20-period moving average and a two standard deviation line below a 20-period moving average. Now, if you don't follow standard deviations, that's okay. Really what it's trying to do is just see, it tries to define average. And for this indicator, that average is 20 days. What has the average price been over the last 20 days? And then what are the extreme departures from that average? If we were to capture 95% of price activity, anything outside of that would only be a 5% likelihood, 2.5% above, 2.5% below. So that's what this indicator is trying to do. And what some will do, some traders will look for what's known as a squeeze. When these lines don't have to be drawn very high or very low above and below the average, it might mean the stock has really gotten quiet over the course of 20 days. And we call that a squeeze. So when we see that upper line come down, when we see the lower line rise toward, so if there's a narrowing or a pinching of those lines, this is referred to as a squeeze. And for some, they might interpret that as kind of the calm before the storm. So you can see squeezes here. Here's a squeeze right here. There's a squeeze right there. There's a squeeze right there. And as I start to add squeezes to the chart, one thing that you'll notice is there's a ton of them. Yep. Anytime we see those lines narrowing toward each other, that can be identified as a potential squeeze and a potential trade setup. But there can be so many of them that they can lead to a lot of potential false signals. So for some traders, they're trying to figure out, well, what's a legitimate, like an authentic squeeze, and what are sort of the imposters? What are those that aren't truly significant? Well, how do we define significant? Let me right click on all these drawings. I'm going to clear those drawings off. And what the creator of the TTM squeeze indicator did was they defined how narrow those lines had to get. And they used another similar indicator known as Keltner channels to define that. So let's bring up Keltner channels. And as we add that to the chart, we can see that our Bollinger Bands are a 20-day moving average with lines drawn 2 standard deviations above and 2 standard deviations below. A Keltner channel also uses a 20-day simple moving average, but it draws lines 1.5 ATRs above and below. So let me show you that on the chart. Actually, let me make its lines a little bit thicker. The Keltner channel lines, I want to make those a little bit thicker. Let's give those a 3 out of 5 in thickness instead of just a 1 out of 5. So it'll be easier to see the difference between the Keltner channel and the Bollinger Band. So here's our Bollinger Band, the thin line, And when those lines narrow sufficiently enough that they squeeze inside of the Keltner channel lines, which is our thicker lines, here's what that translates to roughly. It means that all the volatility over the course of the last 20 days on average has now sunk inside of just one ATR above and below current price. Or in other words, average volatility has gotten inside of about a day and a half up or down from average price. So Ricebird, you haven't seen Keltner channels? That's what it is. It's an ATR and a half above and below our moving average. All right. So here's what a TTM squeeze trader will be looking for. They'll be looking for events kind of like this. Let me highlight this period right here. You see how our thin lines are getting inside the thicker lines? It means that we're getting an extended quiet period. And it's extended enough that we could capture that average volatility in just about a day and a half. That's what an ATR represents, an ATR of 1.5. So these periods are typically preceded by a sideways move in the stock. And I think you can see that right through here. Right there and right there. See that? Leading into this narrowing of those bands. So this is what the TTM squeeze indicator is looking for. And here's how it displays it. So let's bring up our TTM squeeze indicator. TTM squeeze, there it is. I'm going to apply that to the chart and click OK. And the TTM squeeze consists of a series of histogram bars, red and yellow, light blue and dark blue. But it also consists of a series of dots running down the center line, green dots and red dots. So when we see a green dot just means that our Bollinger Band is currently outside the Keltner channel. Right? So here, during all of this time, the Bollinger Band, going through a series of squeezes, never got inside of the Keltner channel. When we get a red dot, that means that our Bollinger Band has gone inside the Keltner channel, and we may be seeing an unusually quiet period compared to how volatile the stock has been before. Or another way to say that is that we've seen an unusually extended sideways pattern in the stock price. That's what the red dot means. So for some traders, that carries potential significance. It means that price is kind of squeezing. It might be channeling for a while. And when we see a channel, commonly the technical trader expects that channel to just be a resting point for price. And after the stock is done resting, it may make a strong move up or down. All right? So how can we tell up or down? That's where the histogram bars come in. So let me zoom in on this period right here. You'll notice we've only had a couple of strings of red dots all year long on Caterpillar, despite a whole bunch of Bollinger Band squeezes. So one thing I'll say before we focus on this string of red dots is that for most Keltner channel traders, 1 or 2 red dots is not considered significant. What that would mean is that the Bollinger Bands just temporarily went inside the Keltner channels, but maybe it was a 1 or 2 day artifact, inconsequential. However, if we get a string of those red dots, it means that things have gotten quiet for a pretty good period and they are staying quiet. It means that Bollinger Band is staying inside our Keltner channel. And it's kind of like the coiling of the spring. This stock is just going sideways and sideways and sideways, and maybe it's getting ready to pop. All right. So for a TTM squeeze trader, this can be an exciting time. Let me zoom out just a little bit further on. Let me do this. There we go. Zoom back here. But so a single red dot, not typically consequential to a TTM trader. 2, probably not. 3, maybe, starting to get there. Typically, there tends to be a minimum threshold of 4 or 5 dots for TTM squeeze traders. Some might act on 1 or 2. That hasn't been my experience in operating in the circles of TTM squeeze traders in the past. But when we get to that 4th dot, the trader may look back and say, this has been a pretty good channel. And these are almost, not always, but almost always preceded by extended channels in price. So now what the trader is waiting for is for a green dot signaling that the Bollinger Band is starting to widen again. It's starting to get outside of the Keltner channel line again. And maybe the stock is now on the move. Now, the other thing they might be looking for is a breakout in one direction or the other. Because we've been channeling, we've been going sideways. Which direction is price heading? Obviously, we can look at price. Another thing we can look at is the histogram color. If it's blue, that's typically accompanied by a bullish breakout to the upside. If it's red, it's typically accompanied by a bearish breakout to the downside. Now, a final thing. So Scott says, okay, you got that, Scott? I got thumbs up. Yeah, 4 to 5 is typically the minimum. Final thing is when we get that first green dot, what some traders will do if they haven't done it already is just look back over that red period and before, and the time before, is actually it takes some quietness from the stock just to generate that first red. The stock has to be quiet for a while before the Bollinger Bands can narrow enough to get inside the Keltner channel. So the trader might look back over the period covered by the red dots and before and look to define where has resistance been, where was the price ceiling, and where was the price floor. And I think I kind of slapped it on, but in this case, it looks like I did a pretty fair job. So as we get that green dot, yes, that's typically the entry signal if the stock is also trading outside of the channel. Sometimes you'll get a green dot and the price hasn't moved outside the channel yet. So they might wait for another green dot. But in this case, yeah, we got our green and price has moved outside that channel. So that's the signal for entry. What's the signal for exit? The signal for exit is typically used by the channel width here. So here's what we might do. Let me show you a little technique on thinkorswim. Let me delete this channel. Just going to remove that drawing and I'm just going to redraw it. So it looks like, you know, our resistance was kind of right up here. We could draw up to the candle highs or we could go to the candle bodies. But let's get a horizontal line going out here to our green dot. There we go. And then let's go down. Where was support during this period? Might be somewhere in this range. There we go. But when we draw using the channel tool, here's a technique that can be applied. We can right click on that channel. Let me zoom out just a little bit. There we go. Right click on that channel and we can duplicate it. When we duplicate that channel, we can just click and drag that up. And what I'll do is just overlap the resistance line with the new support line. And what that might do is project for the trader a target. In this case, it looks like it was a pretty good target. Doesn't always work out perfectly. Sometimes the stock goes zinging right past the target. Other times it can come up short. That's certainly possible. But that is a technique that's commonly used for identifying targets, just using the previous channel. So where might a stop be placed? Well, our assumption is with the Bollinger Bands widening, looks like price has some new life in it. The trader's assumption is that we should be going up. And if traders are creatures of habit, maybe if they were trading in a channel of this width before, maybe we've just stair-stepped up. We're going to trade in a similar channel width. So we're looking for a target here. But sometimes it doesn't work. And sometimes price just fades again. And that Bollinger Band can narrow right back up and we go back into the channel, or stock can break on down. So where might the trader just admit, looks like this one isn't going to work? Well, a common stop placement is we take the width of the channel. How wide was this channel? Looks like our low was down here about 540. Our high was up here around 585. About a $45 wide channel. We take 1/4 of that. That'd be about 11 bucks, if you'll forgive me a little bit of rounding. But if price slides back down 25% back into the previous channel, so on a $45 wide channel, that would be if it goes 11 bucks back into that channel, that trade might be over. Why 25%? What's magical about 25%? Well, very commonly, when the signal comes on the breakout, we're already some distance toward the target. And so there may not be tons of meat left on this trade. And therefore, if we're too patient, if the stock comes back down, goes back into that previous channel, those losses can outsize the reward potential of the trade. So using a relatively tight stop in the top quartile of that channel may deliver to those traders who are looking for, at least a 1-to-1 reward to risk, at least $1 of reward potential for every dollar that they're theoretically risking. That might help with that. All right, so bottom line it, channel width to establish a target, stop if the price falls 1/4 of the width of the channel back down into the channel. That might take a little bit of repetition to get familiar with that. So this has been an example of a bullish trade scenario. There was also one I saw earlier on Caterpillar. Can this scenario be traded bearishly? Yeah. Now, one thing I'm going to do now, though, is I used the Bollinger Bands and the Keltner channels to explain how the TTM squeeze is built. We don't actually need those on our charts. Right now, they're just cluttered to me. So I'm going to come up here to our edit studies, and I'm going to take the Bollinger Bands and the Keltners off. And we're just going to use one study to create our trading system. So look back here. We have a series of red dots. What does that mean? It means that things have gotten quiet. Does it look like things have gotten quiet? Let me zoom in on this time frame back here. With this series of red dots, does it look like price has gotten quiet? I think an argument could be made for that. Now we finally get a green dot. And in this case, we're breaking downward. Price is moving down, and we're seeing red histogram bars rather than blue. So on the appearance of that green, someone might be thinking, time to trade bearishly. So what they'll do here is look back over the time frame, and this could be, I don't have more time because that's actually the first day of the whole last year. So I'll just use what's on the screen. But we might look at where was support and where was resistance. Let's kind of put that one right there. So there's our previous channel, and we can right-click on that and duplicate that drawing and use that to generate a potential target. And in this one, we better have been quick because this one took maybe a day and a half, a day to hit that target. Yep. So this is a trader that have to be paying attention, but it can be used theoretically to plan and place bearish trades as well. Now, not every one of these is going to work out. That's why we have that plan for if the stock starts to misbehave, we have a stop in place. Wiley says you think the coaches should write a book. I'm not that ambitious, Wiley. I'll get up and talk for 45 minutes, and that makes me feel accomplished. All right, so let's go look at a stock with a current signal. By the way, how do you find current signals? Actually, building a search for this, it could be done with a ThinkScript. In my view, it's not really necessary. What we can do is just come over to a watch list. It can be a personal watch list. It can be one of the public watch lists like the S&P 500. And you just click on a stock. And here's all we're looking for. Let me just grab one at random. What we're looking for to the far right is, let's say we're trying to look for a bullish entry. We're just looking to see, have there been recently 4 or 5 reds? And is today's dot green? That's it. Look at this. Nope, these are all green. That means our Bollinger Bands are still wide. They're outside the Keltner channels. There's not a squeeze happening, nor has there been one recently. But there has been one on Archer Daniels Midland. Look at this. What's going on with ADM? Let me zoom in on this time frame. So this thing squeezed for a long time. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. What do we have? 20 red dots there. And we just got a green today. Price looks like it's finally starting to move. So our trader here might look over recent history, and let's see if we can identify where we think resistance and support is. We could go up here, but there's only one touch up here or up here. What if we draw our resistance kind of right through that? I think that channel or that candle right around 70 bucks. There we go. That'll give us a touch point right on the top of this candle. It goes across the body of this one. It's coming right close to these. And support, boy, it could be here, could be down there. That's a big old candle. Maybe split the difference. Might be right there. There can be some discretion sometimes. So there we go. Let's place that as our estimation of what that channel was. Now we can right click, duplicate that drawing. I think this one's been on, it's on its way up already. Where does that give us our target? Looks like that's up there at around 77. Do we call it 77.50? All right. So if that's our target, 77.50 or 77.30 or whatever, it's only about $5 of reward left there. If we place our stop 1/4 of the width of the channel down below support, what does that turn out to be? So if we're down here at 63.5 and resistance is up there at 70, that's about a $6.50 range in price. Let's do some quick math here. Get out a calculator. 6.5 divided by 4 is $1.62. I'm gonna just round that off to 160. So $70 minus 160 would have our stop at 68.40. Okay, so our target becomes 76. Let's map this out over here. Target. Let's go 76.30. 76.50 might actually be above that target range. And our stop was going to be at 68.40. And then this is going to allow me to do this, 68.40. Let's just eyeball this just quickly. So if we're at 72 and change, and we have our stop down there at 68 and change, it's about $4 of risk and about $4 of reward. We're right about $1 for $1. So I'm going to go ahead with that trade. Mary Burns says, are you incorporation fair value gaps when doing this? My apologies, Mary. I'm not quite sure what you're asking there, but no, I'm not taking any other technical factors into consideration. And that's not uncommon for a TTM squeezer. The objective of this discussion was to review how a trader might set up an entire trading system with just one indicator. Yep. So legitimate question. Could we start to bring in other indicators? We could. Yep. Weigh the pros and the cons. Is it helping us toward building, hopefully, a better trade system? But that would just be outside the scope of the discussion parameters that I said at the outset. Eric, look at that. It just turned red, didn't it? Yep. I'm going ahead with this trade anyway, even though for some they may say, let's hold off. Let's see if this comes back down and we get another green or something like that. But let's go ahead with our trade. And in this webcast series, we're committing about 10,000 bucks to each position. So how many shares can we buy? $10,000 divided by about 72.25 is going to be 138 shares. So let's put in an order to buy, right click, buy custom with OCO bracket. We're going to buy 138 shares. And we're going to link those quantities together by clicking on that little icon right there. That's just repairing a broken link. So you can see the sell quantities automatically populated. I'm going to put this in as a market order. Markets are moving. Of course, there's a risk when putting in a market order. But we're going to put our target up there at 70. It was 76.30, was it not? We'll make that our limit order. We want to sell for that price or better. That's going to be our limit. Or we're going to have our stop down there at 68.40. Is that right? Yep, 76.30 and 68.40. And I'll make that a good till cancel order. And now I'll just click confirm and send. So we're going to buy 100 shares of 138 at the market price. We're going to sell those shares if they happen to rise to 76.30. We're also just going to take our lumps at 68.40. We already saw in real time our little green dot turned to a little red dot because price kind of weakened as we were talking. Well, there may be advantages to that. Maybe we're buying at a lower price, but also our entry signal disappeared. So if we had the luxury, maybe we sit around together and trade notes and wait for the price of strength. We can't do that. I got to wrap this one up. So Chris says, is it too much risk? That's always left to the trader to make that decision. But here's a funny thing that happens when our reward to risk scenario changes. If the reward potential is getting smaller, it means we're getting closer to the target. It makes it easier mathematically to get to that target. It also makes it harder to get down to the stop. So there's a little bit of a teeter-totter effect. Smaller reward, but a higher probability of success. Larger risk, but a lower probability of failure. Trade-off. All right. But we're going to place this order. There's no commission on this trade, but there can be on some types of trades, and I'm going to click send. Mystic Dag asked a good question. We don't do any options trading in this webcast series. At least I just try to avoid it, just to keep the focus on the charts and not on sort of like the strategy selection. I just have to explain too much that has nothing to do with charting if I started trading options. So yeah, I tend to do just stocks. All right, but let's send that order off. And we'll see how Archer Daniels Midland does. Let's take a look at our order. Markets are open. We'll see if this fills pretty quickly here. There it is. Great. So we bought that at 72.24. And we'll go to we close up our working orders here. There it is in our position statement. You can see that position. So we'll follow up on this in subsequent webcasts. But we've accomplished what I set out to do today. I did want to take a quick look at our current markets, our current positions in our example portfolio. We did that. We then looked at the markets, and then we built an example trade system, complete trade system. When to buy, when to sell, when to take profits, when to take losses, all using one indicator. So hope this has been helpful for you. Everybody, this is what we do on Fridays. We talk about charts. So if you want to put it in your personal calendar to join me each Friday, I'd love to have you here. But time for me to let you go enjoy your weekend. As you do, first of all, make sure that you're taking full advantage of the full slate of educational resources available to you from Schwab Education. Number one is to make sure that you're subscribed to the Trader Talks channel. Go down below the video stream right now, or the video on the recording, and click on that subscribe button. It only takes a second, doesn't cost anything to do that. But our channel, just go to the Trader Talks Schwab Coaching webcast channel. You can join the live streams right here. You can also find playlists for previous webcasts. And you can do keyword searches, as we've done already today. So another thing that Kevin and I would suggest you do is to follow us on social media. It's the place to connect with us in between these live streams. So you can find and follow Kevin and me on X. On X, Kevin can be found at Kevin Horner CS. You can find me on X at Cameron May CS. Here's my profile. This is what my feed looks like. You can see I'm very active on X. And if I make a post and you reply to that post, like right here, if you reply to this post, I just try to reply right back to you. As long as it's not too far off topic or too political or religious, I'll make comments there. And you can also find and follow me on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS. Give me a follow there. I do the same thing, post on LinkedIn. If you reply to my post there, I reply right back to you. Everybody, I'll look for you there. But thanks to everybody for all the thumbs up. I can see 142 people still watching the live stream right now, 65 thumbs up. Thanks for doing that. That's a nice pat on the back to your presenter when you do that. But it also gives us a nice boost in the YouTube algorithm for our video. So more people can find these discussions of like building a complete trade system using a single indicator. So thanks, guys. Have a great weekend. Kevin, thanks for helping out in chat. Everybody, I will look for you on, I'll look for you in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But until the day arrives when I see you again, I want to wish you the very best of luck. Happy trading. Bye-bye.